Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello. Welcome back, Profit Hackers, to the Cash Hacks Show. More specifically, the Contractor Cash Hacks Show. We are going to talk a little bit today about gross profit margin, why it's important, why it's one of my top 3 numbers to track, and help to understand it a little bit, right? So first, I want to start off with a quick story. I grew up in the 80s, and I remember seeing Empire Strikes Back in the theater, but I was really young. The first Star Wars show that really impacted me, and it's still my favorite, was Return of the Jedi. I loved the ninja guerrilla warfare teddy bears, otherwise known as Ewoks. And as part of the merchandise, they came out with an Ewok village. Right? It's pretty cool. It was about this big, and it had a little net to catch people and all the different trees and things like that. It was super cool. I was super excited about it. And that is the very first thing that I remember saving my money for. And I remember while I was saving my money, first question I had was, how much was it, right? So I needed to know what the target was. The second thing I wanted to know was how fast could I get there? And what did I have to do to get there, right? So there are all kinds of different chores and mowing lawns and things like that I was able to do to save up money. And I remember going to buy it and just feeling so successful and so pleased with myself. And of course, if you buy your toys yourself, you always take care of them that much better. And so I took very good care of my Ewok village and had a lot of fun with it, right? But I bring up that story because I want to compare it with your gross profit margin, right? In business, we have goals, right? One of the goals is how much money can I put in my pocket, right? So just like my target with the Ewok village was how much money did I need to save in order to buy it, a goal for a business would be how much money can I put in my pocket, right? Well, it's really pretty simple to be able to understand how much revenue, how many sales you have to have in order to be able to reach that goal. And it all starts with the gross profit margin, right? So gross profit margin is simply your gross profit divided by your revenue. What this ends up telling us is it tells us let me back up. Let me back up for a second. Gross profit margin comes right after the costs on a profit and loss. So the first item on a profit and loss is the revenue. The item right after that is cost of goods sold, right? We've been calling them on the truck costs, right? On a profit and loss that is compliant with the government standards, which we've talked about in the past, there are certain things that you can and cannot include in the cost of goods sold to get there. So on a standard profit and loss, we have a little bit different picture than when we do it our way with the on the truck costs, right? With the on the truck costs, we're finding out what our actual gross profit margin is because we're including all of the on the truck costs, all the costs that we need in order, or that we need to include in order to get to that gross profit, right? These are all the things it takes to do the work. So we have the revenue, then the cost of goods sold, and we subtract the cost of goods sold from the revenue, and that gives us our gross profit. Now, the word margin in math is another way of saying percentage, right? So that's why you take the gross profit and divide it by the revenue, because that gives you what percent of my revenue is my gross profit. And say we end up with 25 cents. By default, that would mean that our costs are 75 cents, right? So for every dollar of revenue that we bring into the company, 75 cents of that revenue is going to be taken right off the top to cover our cost of goods sold, our on the truck costs, right? That's taken straight off the top. And we are left with 25%, 25 cents out of every dollar. Now that gross profit now has to cover all of our selling, general, and admin expenses, which we'll talk about in a following episode here. And then it has to cover our profit as well. But it really is a rate, our gross profit margin, because it tells us how long it takes us to reach our goal, right? So we're going to talk a little bit more about the hill in the next episode, in the next 2 episodes. So pay attention to those and follow up with those. Make sure you listen to them. But for now, what we need to understand is that our hill includes all of the expenses to run the business. So it's our office rent and utilities. It's our software to do bidding, and it's our sales team, and it's our office admin staff. All of those things are required to run the business, right? So what we want to do is we want to add up all of those and find out what the size of that is. And then we can use the gross profit margin to help us understand how we get over that hill of expenses, right? So that's coming up in 3 episodes. So again, keep turning back in and reading those. But before I sign off, I just wanted to point out that we've got new swag here, right? I got my hats in, got the puffy logo up here, and then here on the side, right here, the Profit Hackers logo right there. So comment below and let me know what you think about the new swag and what you think about the hats. So that's all for this time, and I will talk to you again soon. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.